Swiss Banking, 27 Lessons for Foreign Clients. 1. Swiss banks want relationships. Swiss private banks prioritize long-term relationships over short-term deposits. Banks with 300-year histories are more interested in clients whose financial trajectory benefits the institution than those chasing temporary gains. Minimum deposits are flexible if the relationship holds potential. Footnote: Swiss banks will overlook standard deposit thresholds if a client offers long-term value. 2. Swiss bankers have money too. Swiss bankers are high-level professionals with serious paychecks, often earning 6 to 7 figures depending on tenure and clientele. This financial alignment with clients leads to sophisticated advice from people who understand wealth. Footnote: Swiss bankers are highly compensated and experienced, aligning them with clients' financial interests. 3. High fees can be avoided. Some clients unknowingly pay over market fees, upwards of 3.5%, simply due to non-standard profiles. But with guidance, assets can be diversified across better banks with transparent pricing, cutting costs by over 50%. Footnote: Clients can reduce Swiss banking fees dramatically by selecting the right banks and structuring. 4. Banking privacy exists, but not for taxes. Swiss law still protects banking privacy. However, financial information can be disclosed to tax authorities under global reporting standards. Don't mistake privacy for anonymity. Footnote: Swiss banks maintain privacy but comply with tax information exchange agreements. 5. Everything is negotiable. Fees, deposit minimums, and even account structures can be negotiated. Swiss banks aim for win-win arrangements, adapting to client needs rather than imposing rigid frameworks. Footnote: Swiss banks are flexible in crafting tailored arrangements for qualified clients. 6. You don't have to invest. Many Swiss banks allow clients to simply hold funds for security or diversification without engaging in investment services. These arrangements come with lower fees and reduced complexity. Footnote: Clients can use Swiss banks for safe custody without mandatory investing. 7. Switzerland isn't always the best fit. If you're just looking for a place to stash cash or access a few currencies, other jurisdictions like Singapore or the Channel Islands may offer more efficient setups. Footnote: Alternatives to Switzerland can offer lower barriers and easier onboarding. 8. Swiss banks accept nearly everyone. Unlike many global banks, Swiss institutions routinely onboard clients from high-compliance regions such as the U.S., Canada, EU, and Latin America, and even handle complex sources of wealth. Footnote: Swiss banks maintain global client bases and accept profiles other banks reject. 9. Crypto source wealth is accepted. Swiss banks increasingly accept crypto origin wealth if documentation is thorough. A few even support wallet tracing and compliance auditing in-house, simplifying onboarding. Footnote: Crypto is acceptable in Switzerland with sufficient documentation and compliance vetting. 10. The bank you choose matters. Different Swiss banks cater to different profiles. Picking the wrong one wastes time, results in denials, and adds friction. Alignment of client profile and internal policies is key. Footnote: Success hinges on matching client profile with the correct Swiss institution. 11. Swiss bankers are everywhere. Swiss private bankers operate globally, not just in Geneva or Zurich. Meeting one in your region can streamline onboarding and increase comfort with local documentation. Footnote: Swiss bankers operate globally, making onboarding more accessible worldwide. 12. Your banker is the real relationship. Clients stay loyal to bankers, not banks. When a banker moves, clients often follow. Choosing the right banker is as critical as choosing the right bank. Footnote: the private banker often defines the client relationship more than the institution itself. 13. Pre-qualify before applying. Not all bankers want to serve every client. Some refuse based on deposit size or risk profile, while others welcome those same traits. Pre-qualifying avoids rejections and saves time. Footnote: pre-screening applications with specific bankers prevents mismatches and delays. 14. Swiss banks are transparent. Despite their secretive reputation, Swiss banks issue clear mandates outlining services, fees, and investment strategies. There's no small print, you'll know exactly what you're signing. Footnote: Swiss banks offer clear service agreements with full disclosure of fees and terms. 15. Banks help reduce taxes, legally. While Swiss banks cannot erase tax obligations, they can help clients avoid triggering taxable events using structured portfolios and deferral strategies. Footnote: Swiss banks offer effective tax deferral strategies within legal frameworks. 16. Asset-based lending preserves wealth. Lombard loans allow clients to borrow up to 95% of their assets' value without selling. This unlocks liquidity without triggering tax events, preserving growth and deferral. Footnote: asset-backed lending enables liquidity without taxable asset liquidation. 17. Gold can be leveraged too. Precious metals stored in Swiss vaults can be used as collateral for Lombard loans. This turns static holdings into dynamic, usable capital. Footnote: gold holdings in Swiss banks can be monetized without sale. 18. Custody assets are protected by law. Client-held assets in custody, such as securities or gold, are excluded from bankruptcy proceedings under Swiss law. Cash has a 100,000 Swiss francs insurance cap. Footnote: Swiss law protects custody assets from creditor claims in case of bank failure. 19. U.S. citizens can still bank in Switzerland. Despite FATCA and reporting hurdles, Swiss banks still open accounts for Americans, with higher minimums and more documents. These accounts are fully reportable. Footnote: Swiss banks still accept Americans, though onboarding is more rigorous. 20. Quotas limit U.S. clients. Some Swiss banks impose annual caps on total U.S. source deposits to manage compliance. Qualified Americans may be rejected despite meeting minimums. Footnote: Swiss banks self-limit U.S. deposit inflows regardless of individual qualifications.